Okay, so let's move to the Q&A session for coffee and for PetCare. Let's start with Vika here.
Thank you very much, Victoria Petrova from Bank of America. I have one on coffee. When you were talking about China, India, Africa, and MENA, specifically on China and India, you said it's around 40, penetration is around 40 cups per person per year. What makes you think that this market will grow from here, given relatively slow historical adoption? And my second question is on Pet US. You shortly elaborated on additional capacity versus slowdown in pet adoption, which is one of the key concerns around US pet care. Do you think there is any overcapacity currently in the market? And are you one of the players in these subcategories? And how should we think about pricing in PetCare US in this context into 2025 and overall, maybe also within this kind of three parameters such as costs, protein, grains, capacity, and demand? Thank you very much.
Thank you. So let me start with coffee. You're right, we still have a lot of the world that is drinking, on average, relatively low amounts of coffee. Most of these are tea markets. And look, the first thing that gives me real confidence is we know the long-term historic trend of tea markets converting, if not entirely, to large parts of their consumption in coffee. Just look at Russia, look at Japan, look at the UK. It's only in the last couple of years, with all of the coffee consumption in the UK, that coffee has overtaken tea. It takes time. So it is a trend that we know happens and it will continue to happen. Specifically in those markets, while the average is 40, what we're also seeing is young consumers' cup consumption is much higher already, and in key markets and cities, it's much higher already. So you go to Shanghai, the average is not 40 cups. The average is double that. So I'm really confident that with the explosion in coffee shop culture, with youth culture, with coffee not just being hot, but being this real versatile, variable drink, that we will see consumption grow. And then the last thing I would say is look at India. India, I give you the example, that market has doubled in the last 10 years. In the next 10 years, it's going to at least grow at that rate, and it could easily grow faster with all of the innovation coming on coffee.
Okay, I'll take the pet care example. So first, I'd like to say that pet care is stable. So we have pet population is stable in the U.S., maybe up slightly. So we haven't seen a downturn. It's not growing as fast as it did during COVID, but it's still very healthy and very strong. Secondly, we're very excited about the capacity that we've gotten, because for the last 3 years, we've been extremely capacity constrained, which has really limited our ability to even service the demand that we have at retailers today. So the first thing we're going to do is get demand back, get everything back on shelf that we needed to. Then we can actually start to promote again. And then finally, and most importantly, we get back to being the leader in the category through innovation. And innovation is the way we premiumize the category. And that's how we're going to get the growth rates back.
Celine?
Céline Pannuti. I have 2 questions on coffee. So sorry, David, we already spent a bit of time yesterday, but follow up on that. You said, I think, in Barcelona that Starbucks should be a 5 billion Swiss franc franchise, and I think you expected it to be 3.6 by the end of 2022. Are we there in terms of the 5 billion? And what's the next step for this franchise? And my second question is on premiumization and pricing in coffee. If I look at RIG, it has been, I think, 1.7 year to date, despite low pricing, and you certainly need to price again given cost inflation. We also saw that Nespresso in RIG is underperforming. So it feels like, and I think we see that as well with Starbucks, that consumers are more conscious about how expensive coffee is. So how do we solve the RIG versus pricing equation going forward? Thank you.
Thank you. So look, on Starbucks, we're very happy with the progress of Starbucks. We're absolutely on our acquisition case, and we've added over the 1.5 billion incremental Swiss francs that I mentioned in Barcelona. So we continue to be well on track with Starbucks. Look, when it comes to RIG and volume, a couple of things. If you think about volume growth for the category generally, given all of the opportunities to get new consumption and new consumers into the category, there will be more cups coming into this category over time. So I'm not concerned about our ability to see cup consumption grow over time. But it's also true that organic growth for the moment, especially in pricing round, is where you're going to see more of that potential. Also, when you think about where the growth comes from, in big developed markets, cup consumption is going to be mainly trading up. So same number of cups but added value, whereas in emerging markets you're going to see much more incremental cup consumption. So I think that would be the balance I would see.
Jeremy?
Hi, Jeremy Fialco, HSBC. I've just got one additional question, and that'd probably be useful to have perspective from both coffee and pet care. So obviously, I guess you had the A&P numbers that were there in kind of 2023 and 24, and now Laurent's come in, he's updated the plans. You're going to be investing much more in 2025 in terms of marketing and sales development. So perhaps could both of the business units talk about, okay, you've got this extra money that you're going to invest relative to perhaps what you had thought a few months back. What are some of the initiatives that you're going to be doing to basically spend that money? Where's it going to be going?
Yeah, I can start in North America, and then certainly Leigh can talk about where the investment is. But on coffee, it's really around investing behind innovation, focused on returning to leadership behavior in the category. So it starts with, do we have the right product? Do we have the right price? And focus investment there. And then how do we drive our share of voice? You heard us talk about that in terms of really expanding our share of voice in terms of a leadership position and accelerating that across all the categories, creamers, coffee, everywhere where we take that incremental investment to actually over-index in share of voice. And that's where we're investing. And the other one that we haven't talked about, but also investing in product. We have 60-40 on the majority of our products today. But there are still opportunities to continue to improve our products and invest there as well. So we continue to look for ways to accelerate our product performance and even move past 60-40 and beyond. And we'll invest across the entire consumer demand funnel, or generating demand funnel across all of coffee and creamers. And it started actually in 24, and it will accelerate into 25. Sorry, Guillaume.
No, I'm going to start with a global perspective, and maybe Nidali can share some examples on US. What Laurent has presented this morning, we are fully aligned with this framework of this virtuous circle. By the way, we managed to protect our margin over this turbulent times. And the recovery in PFM investment has started. So next year we'll be back to what we used to have pre-pandemic. So this is this virtuous circle that we will follow as a guidance every single day. And where the money will go, we have these big bets. Again, same framework, big bets are in place. They relate to innovation. When you see this gourmet revelation, for example, that's one of the big bets. But we have also some regional big bets. If I take one in Europe, this campaign on Felix with Robbie Williams is highly successful. We will double down and invest further in this kind of communication platform. So it's both innovation and communication. Maybe Nina, one example in
The only thing I would add to what Steve and Guillaume said is we're going to start investing substantially behind our billionaire brands. That's a place that we hadn't been able to do during the pandemic, and now that we're getting capacity and we're getting innovation on them, it's going to be our ability to get back to doing that.
Sarah?
Yeah, I've got two questions. One, in coffee, you talk about the Dolce Gusto machine. Can you just explain to us where that fits versus the Virtuo? Because obviously that's been, the risk presumably is that there could be some cannibalization there, but if you could outline that a bit more detail. And then in pet, as a pet owner, this is really a pain to buy because very heavy. So it would seem to be pretty e-commerce friendly. And you said 25% will be e-commerce, but how much of that is direct to consumer where you're actually getting full data on that purchasing and on the habits? Thanks.
Thank you. Well, let me handle the Dolce Gusto virtual question first, and then we'll do the PetCare one. They're really differentiated in two key ways. When you think of the Nespresso Virtuo system and the Nescafé Dolce Gusto system, two major areas of differentiation. One is in the product experience and the product delivery. Nescafé Dolce Gusto is a full beverage machine. It's not just a coffee brand, it's a coffee and beverage brand. So what Nescafé Dolce Gusto Neo will allow consumers to do is have a great cup of coffee, but they can have that cup of coffee white, flavoured through the machine, and they can also through the machine have other beverages like hot chocolate or tea. So that system is a different offer from Virtuo, which is a coffee first and coffee forward offer, so differentiated by product delivery. They're also differentiated fundamentally by channel. You know, Nescafé Dolce Gusto will be sold through mainstream retail grocery channels, and of course Nespresso is in our own ecosystem. So differentiated consumer proposition and commercial proposition, but both super coffees, which you'll get a chance to try.
And on your second question on e-com, very happy with the progress on this channel. It's, for us, the fastest growing channel. Now, your question on DTC versus e-retailing, it's led by e-retailing. But we don't want to look at this Amazon and Zooplus in isolation of the ecosystem, where we have direct-to-consumer platforms that are growing well, gaining share, but are part of an ecosystem where we capture the whole consumer journey. So e-com, e-retailing going faster, but we want to build on our DTC platform to enhance our ecosystem as well.
Warren, let's go to you.
Hi, it's Warren Ackerman at Barclays. Two as well. The first one is hopefully a simple one. Are you able to give us some idea of the COGS inflation you expect in coffee in 25? And then secondly, can you talk about coffee in Europe? It's great to hear about emerging market and US coffee, but in your home market of Europe in coffee, you seem to be struggling. I was wondering whether you could maybe deep dive a little bit into the trends that you're seeing. You called out Nespresso as underperforming in Europe. What are you doing to actually fix that? And what are we seeing on Nescafé and Starbucks in Europe? Just looking at the scanner data, it looks like Nescafé is struggling in quite a few countries in Europe. So just interested in what you're doing to revive coffee generally in Europe. Thanks.
Thank you. So on the first one, Warren, you're right. It's a simple question with a relatively simple answer, which is I can't give you the impact of COGS inflation next year. You can all see the price of green coffee. That's published. We know what some of those input costs are, but obviously as it flows into our P&L, that's going to be a very different picture depending on where and what we buy and what the recipes are that we use. So I can't get into precise details on what the COGS are going to be. In terms, though, generally of what we're doing in Europe, our European coffee business has been really remarkably resilient, as I said. We've got very clear market shares on soluble. We've got market share wins on soluble. And while over back end of 22 and into 23, we did see some share erosion as we led pricing. As you would expect, private label gained some share, actually relatively modest share gains given the size of the pricing. In the back end of 23 into 24, we've seen some very good share recovery as pricing normalised. So our Nescafé business in Europe is very robust on our core, and that's why we are so excited and why it's so important that we launch this new range of innovation on top. So as European consumers are going to expect some coffee inflation, that they have innovation and the brand support behind the brands to continue to drive them. So Nescafé, I think, has done really remarkably well in Western Europe as well as around the world. And then I did give you some detailed insight into how we're thinking about our Nespresso business in Western Europe. That business is performing actually all in all okay, but it's disappointing versus the growth rates that we would want to see. And I did outline some of those key things that we're doing on Nespresso to reinvest, reinvigorate, and drive some incremental opportunities of availability to allow consumers to get close to Nespresso.
Okay, we have time for one last question. We'll take Patrick's.
Thank you, David. In PetCare, the lack of exposure in AOA is not new. I mean, you already had this in the last couple of years. What have been really the hurdles to not be more successful in AOA, and what are your plans maybe also in terms of M&A there? And second question, overall, e-commerce retailers in PetCare are getting more important, as you just have mentioned. What about the risk that also private label, the share of private label could increase?
So I can start with AOA, and what I would say with AOA is that we have spent the last few years really laying a really good foundation in AOA. We built some manufacturing there. Why we believe that we can grow is for the reasons that I just told you, which is we believe that calorific coverage will increase in some of the areas that Guillaume pointed out. We believe that single-serve wet cat is a great way for us to capture the consumers in the fastest growing segment there. And we believe that Purina One, which is our largest brand that's sold across all channels, will provide that advanced nutrition that those consumers are really looking for. So that's why we believe we can. We need to get distribution, which is one of the pillars that Guillaume talked about when we talk about calorific coverage and expanding growth in those areas. So we've laid a great foundation. We need the incremental investment to get there. And then we believe that we'll start to see over the next 3 to 5 years that growth that Laurent had laid out that's so important in that area.
And on the e-com and private label risk that you mentioned, I think it's not related to e-com as such. It's channel free, and it depends how much value we can create through innovation and premiumization. It's a highly emotional category, so as long as we provide this value to consumers. You saw the private label share that we have today in the category. I think premiumization, innovation, research, science-based advanced nutrition is the best way, and investment to support the brand is the best way to continue to win as we are winning today in e-com.
And M&A in AOA, in PetCare?
M&A, well, listen, always open to opportunities, but you saw that we have the playbook. I showed you the Mexican example. There are many other examples. We have the product superiority, we have the brand portfolio, we have the innovation pipe in place. We will have the investment to. The playbook is there. So let's focus on the core and what we can do with our assets today.
To me, if you take AOA, it's really one of the best examples of this prioritization that Laurent talked about. Yes, AOA has always been an opportunity, but putting the resources behind it, putting the long-term commitment, and actually bringing this idea of fewer, bigger, better to life, right? And AOA is one of those examples. I think it's exactly what he talked about this morning.
Excellent, thank you. So we're going to wrap up the morning now, move to lunch, which will be behind you again, past where we had coffee this morning, and we'll be back in here at 1 o'clock for the next sessions. Thank you.